With Ethereum ETFs recently recording a staggering 1 billion inflow in a single day and prices flirting with all-time highs, understanding the market dynamics has never been more crucial. So let's explore Ethereum's price journey, what's driving the current rally, and why the future looks brighter than ever. Welcome back to the SwapSpace channel. Last week, we explored Ethereum's revolutionary technology and its game-changing transition to proof of stake. Today, we're diving into the market side of the story, from Ethereum's humble price beginnings to today's institutional adoption and what might be coming next. In the early days, when Ethereum launched in July 2015, ETH traded for less than $1. Early adopters who believed in Vitalik's vision could buy ETH for around 30 to 40 cents.
I'm offering you a 50% discount.
By the end of 2015, it had climbed to about $1. And throughout 2016, it slowly gained traction, ending the year around $8. Enter the ICO boom of 2017. This was Ethereum's breakout year. The ICO craze took off, and with most new projects building on Ethereum and requiring ETH to participate in token sales, demand exploded. ETH started 2017 at $8 and reached an all-time high of $1,432 in January 2018.
I even double that shit, just triple it!
The network was processing so many transactions that CryptoKitties, a simple NFT game, nearly brought it to a halt. Then we had the crypto winter of 2018 to 2019, and like the rest of the crypto market, Ethereum crashed hard. By December 2018, ETH had fallen to around $85, a 94% drop from its peak. Many declared Ethereum dead, but developers kept building. DeFi protocols like MakerDAO and Compound were laying the groundwork for the next bull run.
We can do it together, brick by brick.
Next came the DeFi summer of 2020. Ethereum found its killer app in decentralized finance. Protocols like Uniswap, Aave, and Yarn Finance exploded in popularity. ETH started 2020 at $130 and ended at $730, driven by DeFi adoption and institutional interest in crypto. And my favorite part, the NFT and institutional boom of 2021. This was Ethereum's golden year. NFTs went mainstream with collections like CryptoPunks and Bored Ape Yacht Club selling for millions. Institutional adoption also accelerated, and Ethereum reached an all-time high of $4,800 in November 2021. The network's total value locked in DeFi protocols exceeded $100 billion.
Big money. $100 billion.
We made a video diving deep into the craziest NFTs in history. Click the link above to watch it after this one. Next, bear market and building hit us in 2022 and 2023. The crypto market crashed again in 2022, with ETH falling to around $880 in June 2022. But this bear market was different. Ethereum had completed the merge, transitioning to proof of stake. Despite price struggles, network development continued, with layer 2 solutions like Arbitrum and Optimism gaining traction. Now for the best era of all, the ETF era of 2024 and 2025. The approval of spot Ethereum ETFs in 2024 marked another milestone. Institutional money began flowing in, and ETH started climbing again. Throughout these cycles, one thing remained constant. Ethereum's utility and developer activity continued growing regardless of the price, and this fundamental strength has been the foundation of its long-term success.
To our success.
Breaking the $4,000 threshold wasn't just about reaching another number, it represented Ethereum crossing into truly institutional territory and mainstream recognition. Let's examine the factors that drove this milestone.
Details, I want details.
Firstly, it's the approval and launch of spot Ethereum ETFs in 2024. That was a game changer. Just as Bitcoin ETFs brought institutional money into BTC, Ethereum's ETFs opened the floodgates for traditional investors. The recent record $1 billion single-day inflow shows the appetite institutional investors have for ETH exposure without the complexity of directly holding crypto.
Easy money.
We made a video on how Bitcoin's ETFs pushed BTC's price to $123,000 not so long ago. Watch it to better understand the effect of legitimate institutional investing in crypto by clicking the link above. By the time ETH crossed $4,000, the DeFi ecosystem had matured significantly. Total value locked across Ethereum DeFi protocols exceeded previous all-time highs, with protocols like Lido, Uniswap, and Aave showing consistent growth. And this wasn't speculative money, it was productive capital earning yields.
Now that is a future.
Scaling solutions like Arbitrum, Optimism, and Polygon had proven themselves, processing millions of transactions at a fraction of the mainnet costs.
And at a fraction of the cost.
This solved Ethereum's scalability issues without compromising security, making the network more attractive for everyday use. While the 2021 NFT boom was largely speculative, The market that emerged in 2024 and 2025 was more mature. Blue chip collections maintained value, utility-focused NFTs gained traction, and the infrastructure for digital ownership became more robust.
And non-fungible tokens.
Non-fungible.
With over 30 million ETH staked, about 25% of the total supply, the economics have become compelling. Stakers earn 4 to 7% annual returns while removing ETH from circulation.
We've got 4%. We're confirming 4%.
And this created a supply squeeze that supported higher prices. And major corporations began using Ethereum for various applications, from supply chain tracking to carbon credits. This real-world utility provided fundamental value beyond speculation.
Tell them I switched from Bitcoin to Ethereum.
From a technical perspective, breaking $4,000 represented clearing major resistance levels that had held since the previous bull market. This breakout attracted momentum traders and algorithmic trading systems, creating additional buying pressure. The $4,000 breakthrough wasn't a single event, but the culmination of years of development, adoption, and market maturation coming together. Based on current market conditions and recent development, Ethereum appears positioned for another run at all-time highs, and here's why the stars might be aligning for ETH. Recent comments from Fed Chair Jerome Powell about the balance of risk shifting have created a more favorable macro environment for risk assets, including crypto. Lower interest rate expectations make yield-bearing assets like staked ETH more attractive compared to traditional fixed income investments.
But better.
The $1 billion single-day inflow into Ethereum ETFs signals massive institutional demand. Unlike retail investors who might sell on volatility, institutional money tends to be stickier and long-term oriented. These inflows represent fresh capital entering the ecosystem, not just existing holders moving money around. Historically, when Bitcoin reaches new highs and stabilizes, money flows into Ethereum and then broader altcoins. With Bitcoin showing strength, Ethereum often follows with even larger percentage gains due to its smaller market cap and higher utility. And unlike many cryptocurrencies, ETH generates real yield through staking rewards and fee burning. And as more institutions see Ethereum ETFs performing well, fear of missing out could drive additional allocations. Corporate treasuries, pension funds, and endowments are just beginning to explore crypto allocations.
We now had corporate sponsorship.
From a technical analysis perspective, Ethereum breaking above previous resistance levels with strong volumes suggests momentum could carry it to new highs. The relative strength compared to Bitcoin also looks favorable. Of course, crypto markets are volatile and unpredictable, but the fundamental and technical setup appears strong for Ethereum's next major move higher. Now here's something less volatile: the SwapSpace channel giveaway. You can win $20 for watching this video. To enter the giveaway, like this video, comment what you think is the biggest win for Ethereum, and subscribe for more videos and giveaways like this. Good luck. Ethereum has cultivated one of the most passionate and dedicated communities in all of cryptocurrency, and much of that stems from both the platform's capabilities and Vitalik Buterin's continued leadership and vision. Developers love Ethereum because it gives them superpowers. The Ethereum virtual machine is like a global computer that never shuts down. Ethereum also enables financial services for anyone with an internet connection. No bank account required, no credit check needed. And DeFi protocols in Ethereum have provided loans, savings accounts, and trading services to millions of people who were previously excluded from traditional finance.
I don't think like a bank.
And of course, we can't forget the NFTs. They might have gotten a bad rep due to speculation, but the underlying concept of true digital ownership is still revolutionary. Ethereum is where crypto innovation happens first.
I was here first.
DAOs, DeFi, NFTs, Layer 2 solutions, most major crypto innovations either started on Ethereum or were perfected there, and the community loves being at the cutting edge of technology. Unlike Bitcoin's anonymous creator, Ethereum has Vitalik Buterin as its visible, accessible leader. His approach to leadership is unique in several ways. Vitalik continues to contribute technically to Ethereum's development. He's not just a figurehead. He's actively involved in research, writing papers, and proposing improvements. He also sold his own share of ETH for survival of the project and lives a nomadic philanthropic lifestyle.
I mean, immediately when we met Vitalik, I think my kind of stereotype of this crypto bro was, I was like, whoa, this isn't at all what I expected. He is, I think at his core, identifies as a builder and a writer. Like you said, he really does live out of a 40-liter backpack. I mean, he gets $5 haircuts, doesn't have a home. He's kind of fully devoted his life to thinking about Ethereum.
His recent work on account abstraction and sharding shows his continued technical involvement. Vitalik regularly writes blog posts and gives talks about Ethereum's philosophy and future direction. He addresses difficult questions about decentralization, governance, and the social impact of blockchain technology. His essay, "The Most Important Scarce Resource is Legitimacy," is considered essential reading in crypto. And unlike many crypto founders who become distant, Vitalik remains highly accessible. He's active on Twitter, responds to the community questions, and regularly appears at conferences and meetups. He's known for his humility and willingness to admit mistakes.
We love him.
Vitalik also consistently emphasizes Ethereum's long-term vision over short-term price movements. He's been critical of speculation and has pushed for sustainable development and adoption. And this long-term perspective builds confidence in the platform's future.
Feeling confident, are we?
Vitalik has also donated over $1 billion in ETH to various causes, including COVID-19 relief in India and the life extension research, demonstrating his commitment to using Ethereum for positive social impact.
He's got a lot more confidence in himself now.
This combination of technical innovation, philosophical depth, and genuine care for the community creates a loyalty that goes beyond typical investor relationships. And there you have it, the complete market story of Ethereum. From its early days trading under $1 to institutional adoption driving record-breaking ETF inflows, we've seen how each market cycle brought new use cases from ICOs to DeFi to NFTs and now institutional investment.
A lot has changed since then.
What's your take on Ethereum's future? Are you excited about the upcoming upgrades? Share your thoughts in the comments below, and if you found this analysis valuable, hit that like button, subscribe for more crypto insights, and ring the bell notification. Thanks for watching. And I'll see you in the next one where we'll explore another fascinating corner of the crypto universe. Until then, keep learning, keep building, and stay safe.